The information provided on this podcast is for informational and educational purposes only and does not constitute professional advice. Reliance on any information provided is done solely at your own risk. You should consult with a professional to determine what may be best for your individual needs. I was a kid when the TV show Entertainment Tonight first came on in the 1980s. My mom pointed at the screen one day when host Mary Hart was sitting there with her legs crossed. Those legs were so famous, my mom said, that Mary Hart had them insured for $1 million each. I remembered that story when I was preparing for today's episode of the show, and I had to Google it to be sure it was true. It turned out my mom was absolutely right. But there are probably some other things I think I know about insurance that are actually not true at all. I'm Jay Gabler of Forum Communications Company, and this is Plain Money Talk, a podcast all about your financial life and the things that are affecting it today. In our first episode, Greg Sweeney shared his thoughts on the economic outlook for 2026. Today, I'm joined by Josh Brown, a personal insurance advisor at Bell Bank. Josh is going to help bust some common myths about insurance so you can make smarter decisions about how to protect yourself and your family. Josh, thanks for joining us.
Thanks for having me, Jay. Glad to be here.
Absolutely. Yeah. Well, we like to start these episodes with 5 fast questions. Just jump right into the topic. So if you would, please just answer each of these questions, pretty quickly, and then we'll dive into all these topics, or some of these topics at least, in greater depth down the line. Does that sound okay?
Sounds perfect.
Okay, great. We'll start with the first one. Is there such a thing as too much insurance?
I would say it depends, right? It depends on the coverage that we're talking about. One of the things that we talk a lot about with all of our clients is, we don't want you to be insurance rich and cash poor. So we got to try to find that balance in there somewhere.
Absolutely. Absolutely. So what's the most common question people ask when they find out what you do for a living?
Can you save me money?
And what do you think the answer is usually?
I try to say yes, but I also want to be realistic. Most likely there's an opportunity that we can because, we're an independent agency. We work with a lot of different insurance companies. So odds are yes, but I don't want to put my foot in my mouth either.
Well, I like that honesty, but I like those odds. Okay, well, here's another quick question. I've been told by someone who does not work in the banking industry, so not an expert, but I've been told that extra coverage they try to sell you when you rent a car is always a ripoff. True or false?
I would say false. What we typically recommend when renting a car is to at least get the physical damage waiver through the rental agency. Just that way, if something happens to the car, you give them the keys back and it's their issue to deal with and not yours.
I love that, and that is a great thing to know moving forward. Okay, a couple more quick questions here. How often do people fail or decline to file insurance claims when they would be entitled to do so?
So I would say people actually tend to submit claims more often than maybe they should, right? And so in that regard, right, we want to talk about insurance from a large loss standpoint, not those small losses. So sometimes they're submitting claims that I would maybe recommend, hey, that's something we should probably pay out of pocket.
Interesting. All right, we'll definitely come back to that topic because that is something I would love to know more about. Okay, last quick question. Who's your favorite fictional character, someone from a movie or a TV show or a book who works in insurance?
I would have to say Ned Ryerson from Groundhog Day. I think it's hilarious that on that movie, how he portrays an insurance agent. And some people might say that insurance in general can be like Groundhog's Day over and over again if you're an agent. So,
yeah, I love that movie. I think for me, the answer would be the character Ram in the movie Tron, just an actuarial program trying to do his work and gets drawn on into, combat games and video games, and it's just a poor guy who I feel like is the quiet hero of that movie.
That's awesome.
Well, thanks for rolling with those questions, Josh. And now that I've started to grill you, let's take a quick break and get to know you a little bit better. Where are you based and how did you get into this line of work?
Sure. I'm based out of Grand Forks, North Dakota, but I do get around to most all of our offices. I lead our personal insurance team, so I'm kind of a little bit of everywhere. And from getting into the insurance business standpoint, typically what tends to happen is one of two things. You either have family that was in the business, so you know what it's all about, and you think it's a great opportunity, or you kind of fall into it. And I fall into it category. As I was graduating college and looking at what I was going to do when I was getting done with my schooling, saw this insurance opportunity, and it looked like something that I thought I could be successful at. So said, why not? Let's figure it out. So started on the life insurance side of the business and have now transitioned more to the property casualty side, but still have that life insurance background. So I enjoy what I do on a daily basis, and it's a lot of fun.
Okay, well, I see why Bell Bank suggested that you be a good guest for this episode of the podcast. Now, you mentioned earlier that working in insurance can feel a little bit like Groundhog Day and that you wake up and sort of face some of the same situations. That doesn't necessarily sound like a good thing, but you said you enjoy it. So there's enough variety day to day to keep you interested in this line of work.
Yeah, the great thing about insurance, right, is it's been around forever. So there's not a lot of changes. I mean, there's some things that are changing and evolving and those kind of things like anything else, but just having different conversations with different clients every day, and having that knowledge base to be able to go back on, right? So after being in this industry for 20 years, it's nice when a client asks a question, it's unlikely that I haven't heard that question before. So
Yeah, good. That must inspire a lot of confidence in your clients to
for
know that
sure.
you have that experience coming in. Well, let's start busting some of those myths that we were talking about. And we'll start with one that I totally thought was true. The idea that red cars cost more to insure. I understand that is actually a myth.
That is definitely a myth. How the cost of how to insure a car depends on the make of the car, the value of the car, the model of the car, all those kind of things. But it also depends on the driver behind the wheel as well, right? Does that driver have speeding tickets and accidents and all of those kind of things, right? So in regards to red cars costing more to insure just because they're red, I would definitely say no. Now, that doesn't mean that it might not catch the eye of a police officer if you're going too fast because it's a brighter color, but that's more of a you thing than the car thing.
Right. So I guess what I'm hearing you say is when I'm making decisions around cars, driving, purchasing, what have you, if I want to keep my insurance premiums down, then maybe I should think more about other decisions I'm making around driving versus the decision around what color car I'm buying.
For sure.
Yeah. And so it's not necessarily the case that a brighter car gets stolen more often or what have you. So would lead to higher premiums.
Nope, nope, not at all.
All right, great. Well, that myth busted. But while we're talking about car insurance, let's bust another myth. That is that if your car gets totaled, hopefully, everyone's okay, but it's a situation
Mhm.
where your car is pretty much donezo. Some people think that that means, well, that's it. I don't have to make any more car payments. But apparently that is not true. What's the truth there?
Well, that's not true. Now, obviously, depending on the loan or the lease or whatever and the timing of the accident and those kind of things, there could be some additional payments due. There also obviously is a process in regards to the insurance company determining that the car is a total loss. That'll happen on, day one happens the accident, but it might be, day 13 or 14 where we determine that it's a total loss. There might be a payment that has to come up within that time period. And also, obviously, your insurance payments still continue to happen as we're working through that process. And then once that is all figured out, right, and you then get a new car, we were going to swap cars out, and most likely there's probably a new loan, and there's also new insurance on that car, right? So in all reality, the payments really don't ever go away.
Got it. Got it. Got it. So basically, once you have begun the process of filing that claim, sort of continue on as normal
Yes,
until things transition. And I presume your insurance agent can help you negotiate that transition.
100%. They will help walk you through that for sure.
Awesome. Well, that is great to know. Now let's consider the other end of that spectrum. So we just talked about a situation where a car gets totaled. But what about the other end where, oh, the car just got dinged. Someone doored me. There was a little scrape, a little bump. I get back to my car. I'm like, oh, I don't love that, but it's cosmetic,
Mhm.
basically. Now, some people would say, hey, you have insurance. You're entitled to make that claim. Go ahead, file, get that money, get that ding ironed out. And other people would say, well, hey, hold off on the small claims
Mhm.
since that could actually cause your premium to rise. And you've already alluded to what the truth here is. Can you talk a little bit more about the decision around when to file a small claim?
Yeah, for sure. So when it comes to the small claims, right? So one, you're going to have a deductible that's going to apply, right? So what is that deductible versus what's the cost of repair? So that's a lot of times the first question that we ask clients is, why don't you run to a body shop and figure out what the cost of repair is? Because if you have a $500 deductible and it's $700 to fix it, you know, it's going to make more sense for you to pay the extra $200 to the body shop just to get it fixed. Because for when it comes to insurance and claims and the pricing of insurance, is the insurance companies don't look at just how big any one claim is. So they're not that's a part of the process, but they're looking even more so at what is the frequency of claims. How many claims have you submitted in the last 2, 3, 4, 5 years? And that's going to come into play just as much, if not more, as if I have one $50,000 claim because I totaled out my car versus I have $4,000 claims because I want every little thing fixed because I pay for my insurance and they should pay me back kind of a deal. that second person is probably going to be in a worse situation from a cost standpoint than the first person.
Interesting. So that $200 that I paid rather than filing a claim on that $700 ding, might actually be a good deal compared to what I would pay over time if I made that claim and it caused my premium to rise.
Exactly, because claims tend to stick with you. Depends a little bit on state, so depending on what state you live in, but those stay with you for 3 to 5 years, right? And so that has an effect on your premium for that 3 to 5 year period. And, I would like to say it's simple math, but not necessarily simple math. But if it's a $200 claim and your rate goes up by $100 a year for 3 years, well, you're end up paying more in premiums than you got back from turning in the claim.
Oh, good. Well, that's another reason to talk to your insurance agent, I gather. What I'm learning here is your insurance agent can be a great resource
We are
when you're
here
making
to
these
help
decisions.
for sure.
Yeah. And going into the body shop to get that, to get that estimate made, that is usually not too much of a headache. The body shops
No.
kind of have that down.
Yeah, I mean, and a lot of times these days with the body shops, you go like it's literally they're in there, they're going to take some pictures, and then they're going to send it. They're going to say, okay, you can move on. We'll get it over to you later this afternoon or the next day, that kind of a deal. So,
Okay. Well, that's good to know.
yeah.
Awesome. Well, let's take a quick break from busting myths and tell a story. I was hoping that you could share the story of, for example, a natural disaster or some kind of unexpected event that left a lot of people wishing they had better insurance coverage. I get nervous every time there's hail in the forecast, but I know my car insurance would cover hail damage if it came to that. But
Mhm.
are there other kinds of damage that I might not be insured for that I should know about? I wonder if you could share a story relevant to this topic.
Yeah, so if you think about a storm, right? So one of the things that we think about and have conversations with clients a lot on is in regards to what coverages should I have on my car, right? Should I have just liability coverage where I don't really care if something happens to my car because I'm just not going to do anything about it, or it's an old car, it's not worth a lot, whatever it might be, right? And so when we have those conversations with clients, so if there's a storm type situation, and let's just say that you park on the street, right, and storm rolls through, wind blows a tree down, lands on your car, unfortunately. The question then is, if you only have liability coverage on that vehicle, your insurance company is not going to pay you anything for that damage. And it's not your fault that the tree fell on your car, but you also don't have the appropriate coverage on that vehicle to get payment from the insurance company. So when I talk to clients a lot about, do we have just liability or do we have include physical damage coverage or what coverages should we have? There's a lot of conversation around, are you going to be upset if something that's not your fault happens to your car and you don't get any dollars to fix it?
That is a great thing to point out. It makes me think of a friend of mine who was selling an older car to, someone he found on the internet once. And he told me afterwards, yeah, this guy was asking so many questions about the car. He's had this question, that question. I said, the answer to your first question is $500. That's the cost of the car. The answer to your second question is $500. So maybe if you bought that car.
That car, I would probably say liability only is a great call.
Right. And, there's also the question of what might happen to your house in a natural disaster. And I understand that homeowners insurance doesn't necessarily cover every possible situation. For example, this is Duluth, and some people would think, oh, we're a city on a hill, the floods don't happen. No, floods do happen. And if that happens, that might not be covered by my homeowner's insurance.
Correct. Yeah, you would need a separate standalone flood insurance policy to have any coverage for flooding. Yep. But there's also, you have to understand that there's an actual definition to flooding as well, right? It's if a pipe bursts in your house because it froze, that's not flooding. Your house might have flooded, but that's not flooding, right? And so homeowners would pick that up, but if the flood comes from the river, that's not going to be covered.
Interesting. This is all great to know. Well, thanks for filling us in, Josh.
For sure.
And now for a quick word from our sponsor, Bell Bank.
Behind every moment, there's a feeling of happiness, of security. Behind every dream,
Order up.
there's a spark.
We got the house.
With every challenge,
Just one more step.
there's a safety net. Behind every victory,
Yes!
there's a team. Behind every moment, there's Bell Bank. Member FDIC, Equal Housing Lender.
So, Josh, you mentioned that you got started in life insurance. Let's talk about life insurance. Let's just say that one of our listeners is a healthy young adult, not married, no kids. Now, this person might very well assume there's no reason for them to consider a life insurance policy. Is that true?
I would say it's not true. There's a couple reasons. One, right? Obviously, when it comes to dying, there are costs associated with death, right? Just in regards to burial expenses, those kind of things. If you had any debts that were still outstanding, those types of things, right? That you want to make sure get paid off and everything's taken care of there. But probably the bigger reason why I would say it's a myth is because when you get life insurance when you're young, usually you're really healthy. You get the best rating. The cost of the insurance is usually pretty inexpensive. And the other thing that you're doing when you do it when you're young is you're protecting your insurability for the long time, right? So if something were to happen 5 years or 10 years down the road, say you got a heart attack or you got cancer of some sort, unfortunately, or some of those kind of things, you would still have that policy that you currently have. And you can make that policy typically last even longer without having to go through underwriting again. And so I would say getting life insurance when you're young is a good thing, just to make sure you have that protection when and if you do get married and have kids and want to make sure that if something ever happened to you, they're still taken care of.
It sounds a little bit like saving for retirement. You might think, oh, love my job. I'm going to work forever. I'll be fine. Whatever. But you need to start that process way, 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 way before you're going to need it.
Right, exactly. You don't start saving for retirement 5 years before you retire. That wouldn't work out real well, I don't think.
Right. And similarly, you don't want to take out a life insurance policy when you've lived a great life, you're an advanced age and you're getting ready to sail off into the sunset and thinking, oh, it might be good to take out a life insurance policy.
Yeah,
now.
that might take all those retirement funds.
All right. Well, that is great. That is great to know and to keep in mind. Let's bust another myth. Okay. So we're talking about home insurance. In the case of if you were to own a home and you're thinking about the risks from floods or what have you. As it happens, I'm a renter. I rent a home. So I might think as a renter that, well, if my landlord has insurance coverage, I don't need renter's insurance. Is that true?
That I would say that is not true. Now they might not require you to carry it. However, that covers that the owner has. That covers them. That protects them in the event that something happens. Whereas a renter's insurance policy, which those are usually pretty expensive, typically less than a couple $100 a year, but that protects you as the renter, right? Gives you coverage for your stuff. So if there were having to be a fire or something in the home and you lost all your clothes, you get to go replace your clothes. It'll also give you coverage for additional living expenses while your current spot is getting fixed and put back together and those kind of things. So if you're renting for $1,000 at your normal place, but now I got to go rent at a different place because of this fire and it cost me $1,200. Well, there's coverage for that extra $200 a month that you're paying in rent. So those are the reasons why, amongst others, that you should have renter's insurance. And the other thing too, when it comes to renter's insurance, most likely especially where we live, you probably have an auto insurance policy as well. Usually the savings that you get on that auto insurance policy more than pays for the renter's insurance policy itself. So it usually tends to be almost free.
Huh. That is great to know. So what are the most common claims people tend to file with renter's insurance?
I would say it's going to be those personal property coverages, right? And so something happens, whether it's a fire in the apartment or a pipe burst like we were talking before and damages everything. I mean, you have furniture typically that's in there. You have your clothing, you have kitchenware, whatever. All of that stuff costs money to fix or clean or replace. You would it's a lot better to pay a couple $100 a year for insurance and have insurance pay to replace those things if something were to happen.
Got it. I am learning so much in this conversation, Josh. I really appreciate it. Let's try one more myth before we get ready to wrap up. So let's go back to the scenario where, let's say, someday I own a home and I'm smart enough to secure homeowner's insurance. So now we'll go back to the tree question. You mentioned the possibility of a tree crushing your car and, what you do in that sort of situation, hopefully no one's in the car and that's not the issue. And similarly with the house, let's just say, now this is relevant living here in Duluth because we have a lot of ash trees that have died and not yet been taken out. So there are a lot of trees you kind of look up and you're like, how long is that going to last? So let's just say there's a tree like that in my neighbor's yard, that side of the fence, and one day it just happens. There's a storm, it blows over, it hits my house. Whose insurance covers that?
So that coverage most likely is going to come from your homeowner's insurance, not your neighbor's. So the reason why that is that for your neighbor's insurance to come into play, your neighbor would have had to have been negligent in taking care of that tree. Well, most of the time, that's not the case. If the tree's standing, it's assumed it's going to continue standing. And, a windstorm coming through and knocking it over and falling on your house isn't expected, right? And so it's hard to say that your neighbor was at fault because God decided it was time to blow this tree down onto your house, right? And so that's where your homeowner's insurance coverage would come into play to actually fix the damage to your home.
Okay, so good reason to have homeowners insurance.
For sure.
Yeah, and a good reason to were that tree to be on my side of the fence. It's good to know that I have the responsibility to have a professional look at that tree if I have any doubt as to whether I'm negligent in allowing that tree to remain standing.
For sure. And if something were to happen, hopefully a neighborly thing to do would be like, hey, I understand that was my tree. I understand it wasn't my fault. But you probably have a deductible, and, I would be okay with helping you, cover your deductible because my tree fell in your house. Now, nice neighbor, not nice neighbor, that might depend on how that will work, but
Well, that would that's a little bit better than just baking cookies.
right. You're right. Here, sorry my tree fell in your house. Here's some cookies.
Well, Josh, thank you so much for talking insurance with us today. And we're going to close out the episode with a question that we like to ask all our guests. What is one piece of financial advice that you wish you'd been given a long time ago?
So what I would say is actually the first insurance agent that I had that worked with me on my insurance for car insurance and renter's insurance, that kind of stuff as I was getting out of college. The one thing that he said to me that has stuck with me and that I actually use myself these days with clients is that we understand that price is important. We want to make sure we're getting the best bang for our buck when it comes to insurance. But coverage is just as important, if not more important, because if you pay a really small premium for not very good coverage and something happens and you don't have coverage for that, well, you just wasted those premium dollars. So it might make more sense to pay a little bit more in premium to get the coverages that you need. So that would be the biggest piece of advice that I got. And that would have been, when I was 22 coming out of college, it was something that was like, oh, no, that totally makes sense.
Yeah, well, and that's relevant to your story about, a car being destroyed due to some kind of natural event. How are you going to feel about
Exactly.
that? Yeah, so I suppose you could apply that logic to other things in your life as well. Like, is this really going to be a problem if you're not able to have this covered?
Exactly.
Yeah, great. Well, Josh, thank you so much for taking time to talk with us. I've really enjoyed this conversation and getting to know a little bit more about you and your field of expertise at Bell Bank.
Thanks, Jay. I had a great time as well.
And thanks, everybody, for joining us on this second episode of Plain Money Talk. Understanding your insurance coverage shouldn't be a guessing game. Bell Insurance has real people who take the time to walk you through your options. They'll help you understand what your policy actually covers, what it doesn't, and whether you have the protection you need. So if today's conversation made you rethink something you thought you knew about insurance, maybe it's time to reach out to the experts at Bell Insurance. Visit bell.insurance today to get started. Bell Insurance, helping you protect what matters most with advice you can count on. Bell Insurance Services LLC is a wholly owned subsidiary of Bell Bank. Products and services offered through Bell Insurance are not FDIC insured, no bank guarantee, may lose value, not a deposit, not insured by any federal government agency.